Jai Hind everyone. Welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge etc. Your next promotion is not just a step up in your career, it's a step closer to your dreams, your respect and your financial growth. The Bank Promotion Exams 2025-2026 is your golden opportunity and I'm here to make sure you grab it with both hands. In this journey, we will learn smart strategies, master important topics, and tackle questions just like the exam demands. Remember, success doesn't come to those who wait, it comes to those who prepare. So let's start today, prepare smartly, and make your promotion in 2025-2026 a reality. Welcome to part 12 of my Part to the Corner Office 2025-2026 series, where we break down real bank promotion exam questions and give you clear, practical sample answers about case studies and group discussions to help you climb the career ladder faster. The subject for today is latest developments in Indian banking. Digital transformation and fintech. A. UPI Unified Payments Interface. Dominant trends: UPI Lite, UPI 123 for feature phones, UPI for international transactions. Example: NPCI's partnerships with other countries. B. Aadhaar Enabled Payment System AEPS, its role in financial inclusion. D. Account Aggregator AA Framework, a revolutionary consent based data sharing framework for financial information. D. Central Bank Digital Currency (CBDC), the Digital Rupee, pilot projects for retail and wholesale Digital Rupee, objectives, benefits, and challenges. E. Bharat Bill Payment System (BPS), one-stop platform for all bill payments. F. Regulatory Sandbox, a framework launched by RBI for live testing of new fintech products. Regulatory and policy reforms. A. Revised Liquidity Coverage Ratio (LCR) framework, Basel III norms implementation in India. B. Resolution of stressed assets, updates on the Insolvency and Bankruptcy Code (IBC), formation of National Asset Reconstruction Company Limited (NARCL) and India Debt Resolution Company Limited (IDRCL), the bad bank. C. Prompt Corrective Action (PCA) framework, recent revisions and banks exiting the PCA framework. D. Neobanks, their rising presence and regulatory status in India. E. Digital lending, RBI's guidelines on digital lending 2022 to curb malpractices, focusing on LSPs, lending service providers, and direct loan disbursement. Financial Inclusion and Social Security. A. PM Jan Dhan Yojana (PMJDY), latest statistics, features like overdraft facility, RuPay cards, and its integration with DBT, direct benefit transfer. B. Pradhan Mantri Jeevan Jyoti Bima Yojana (PMJJBY), Pradhan Mantri Suraksha Bima Yojana (PMSBY), and Atal Pension Yojana (APY), enrollment numbers and recent updates. C. Kisan Credit Card (KCC) scheme, efforts to extend its reach to animal husbandry and fisheries farmers. Monetary policy and rates. A. Repo rate, reverse repo rate, CRR, SLR. Keep track of the latest RBI Monetary Policy Committee (MPC) decisions and their rationale. Example: controlling inflation, supporting growth. B. Marginal cost of funds-based lending rate (MCLR), understanding how it impacts loan rates. C. External benchmark lending rate (EBLR). Most banks now link loans to this, like repo rate. Banking structure and performance. A. Mergers and consolidations. The aftermath of the creation of larger public sector banks. Example: amalgamation of Punjab National Bank, Oriental Bank of Commerce, and United Bank. B. Privatization of public sector banks. Government's intent and the list of candidates. C. Small finance banks, SFBs, and payments banks. Their growing role and performance reviews. D. RBI's Financial Stability Report, a biannual report that is a goldmine of information on the health of the banking sector. Topic: Central Bank Digital Currency Digital Rupee. What it is: a digital form of currency note issued by the RBI. It is a sovereign currency. Types: retail, for general public use like digital cash; wholesale, for specific institutions to settle transactions in government securities. Pilot launch. Retail pilot started on December 1, 2022 in a closed user group. Key features: liability of RBI, safer than bank deposits; offline functionality, a key focus for areas with poor internet; interoperability, can be used with other digital payment systems. Benefits: reduce dependency on physical cash, lower transaction costs, enhance settlement efficiency, especially in wholesale markets, combat money laundering, traceable transactions. Challenges: technology, cybersecurity risks, adoption, getting people to shift from UPI or cash, privacy, balancing anonymity with regulatory oversight. Topic: Account Aggregator AA Framework. Description: The Account Aggregator AA framework is a revolutionary consent driven data sharing system in India. Think of it as a secure digital pipeline that allows you to share your financial information like bank statements, mutual fund holdings, GST data from one financial institution to another, electronically and instantly, but only with explicit permission. How it works: instead of you downloading a PDF statement, uploading it to a loan app, you use an AA like an app from PhonePe, Google Pay, or dedicated AA apps. You grant consent for the AA to fetch specific use data for a specific period from your bank, the financial information provider (FIP), and share it with the loan provider, the financial information user (FIU). Key goal: to break down data silos and make credit underwriting faster, cheaper, and more reliable. It empowers individuals with control over their own financial data. Significance: it's a cornerstone of the open banking ecosystem in India and is expected to be a game changer for MSME lending, personal loans, and wealth management. Topic: National Asset Reconstruction Company Limited (NARCL), the bad bank. Description: The NARCL is a government-backed entity set up to clean up the legacy stressed assets in the Indian banking system, particularly from public sector banks (PSBs). The problem: public sector banks were saddled with old, hard to recover bad loans (NPAs), which were consuming their management time and capital. The solution: NARCL. NARCL identifies and acquires these stressed assets, mostly above rupees 500 crore, from banks by making an offer. It pays the banks 15% in cash and the remaining 85% in security receipts (SRs). These SRs are guaranteed by the Government of India, ensuring that banks get a major part of the value upfront. NARCL's job is then to professionally resolve and recover the maximum possible value from these assets over time. IDRCL, India Debt Resolution Company Limited. IDRCL is the management company that works under NARCL to manage and resolve these assets. Significance: it helps banks free up their balance sheets, focus on fresh lending, and improves the overall health of the financial system. Topic: Untapped licensing for universal banks and SFBs. Description: The RBI has moved away from issuing banking license in periodic windows to an on-tap or continuous licensing regime. What it means: eligible private entities can now apply for a license to set up a universal bank or a small finance bank (SFB) at any time of the year rather than waiting for the RBI to announce a specific application period. Eligibility criteria includes a track record of 10 years, a minimum paid up capital, a successful business model, and fit and proper promoters. Significance: promotes competition, allows more players to enter the banking sector, fostering innovation and better customer service. Deepens financial inclusion, especially for SFBs, which have a primary objective of serving undeserved sections. Professionalizes banking, encourages well run corporate and NBFC entities to convert into banks, bringing in professional management. Topic: Framework for Scale-Based Regulation (SBR) for NBFCs. Description: The RBI has introduced a new four-layer regulatory structure for non-banking financial companies (NBFCs) to reflect their increasing size, complexity, and interconnectedness with the financial system. The four layers: Base Layer (BL) includes non-systematically important NBFCs, NBFC, P2P, etc. They face the least stringent regulations. Middle layer (ML) includes all systematically important NBFCs. Like most large asset financiaries, they face stricter regulations on governance, risk management, and capital. Upper layer (UL), the RBI identifies the top 10 to 15 NBFCs by size that are deemed as systematically significant. They are subject to bank-like regulations, example, capital conservation buffer, common equity tier 1 ratio. Top layer (TL). This layer is ideally empty. If the RBI feels that NBFCs in the upper layer pose a significant risk to financial stability, it can move them to the top layer for even tighter supervision. Significance: This is a move from a one-size-fits-all approach to a proportionate and risk-based regulatory framework, recognizing that a large NBFC can pose as much risk as a bank. Topic: BharatNet project and banking correspondent BC Shakis. Description: this is a crucial development at the grassroots level for financial inclusion. BharatNet, a government initiative to connect all of India's gram panchayats, village councils with high-speed broadband internet. Banking correspondent BC Sakhis. Under this project, women, entrepreneurs in villages are being trained and empowered to operate as banking correspondents. They are provided with a fixed monthly remuneration to offer basic banking services, cash deposit, withdrawal, remittance, account opening in the villages using the internet connectivity provided by BharatNet. Significance: last mile connectivity bridges the gap between digital banking infrastructure and rural customers. Women empowerment creates sustainable livelihood opportunities for rural women, reduces cash dependency, brings formal banking services to doorstep, reducing the need for long travel to bank branches. Thank you very much for your patience. Please to like, share, and subscribe to this YouTube channel.